SoFi's recent price action has raised a lot of questions. Today, we're breaking down exactly what happened, why it happened, and what the data actually shows. Hello, everyone. Welcome to Daily Stock Update. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The latest trading session brought some noticeable movement, with the stock finishing about 2% lower as it followed the broader market's downturn. During the day, the price ranged between roughly 26.53 on the low end and 29.07 on the high end. While trading volume reached nearly 87 million shares, slightly above the average near 82 million. The session was shaped heavily by market-wide uncertainty that carried over from the previous day, influencing both pre-market sentiment and early trading. A major component of this uncertainty was the after-effects of the recent government shutdown. Even though the shutdown officially ended, the economic consequences continued to weigh on expectations. Projections indicated around 60,000 job losses and an estimated 1.5% hit to GDP for the fourth quarter. The market had partially priced this in, but the lingering uncertainty caused additional pressure. Another concern was the possibility of delays in receiving key labor-related data for November, data that typically helps guide interest rate expectations. With these delays, investors began questioning how the Federal Reserve might respond. Market expectations for a December rate cut shifted dramatically. Just a day earlier, the probability of a 25 basis point cut stood near 57%. That probability slid to around 46% as fears grew. Any sudden change in interest rate expectations tends to create quick reactions in the market, and that pattern was visible throughout the session. Comments from Federal Reserve officials added more caution. Some statements suggested that supporting another rate cut could be difficult given current conditions. Remarks like these often trigger responses from algorithmic trading systems and institutional strategies, which can amplify volatility. Still, there were moments of strength shortly after the opening bell, but much of that movement appeared algorithm-driven rather than the result of consistent buying pressure. A closer look at the transaction data revealed an important detail. Several large institutional trades were sell orders rather than buys. Even during the final hour of trading, often a time when momentum attempts occur, many significant trades showed large institutions trimming their positions. This kind of selling could be associated with tax loss strategies, profit-taking, or simple risk management as uncertainty increases. However, it fit the overall tone of the day, which leaned toward distribution instead of accumulation. Short interest experienced an unusual rise as well, increasing by about 771,000 shares. Previously, short interest had been gradually declining. Currently, around 9.24% of the free float is sold short, equal to approximately 109 million shares. While this represents a meaningful amount, short activity on its own does not define direction. Over recent months, many institutional investors have continued adding to their positions according to the most recent 13F filings. Major firms such as BlackRock increased holdings by millions of shares, along with several other institutions. Only a few reduced their positions. The overall trend still reflects broad long-term support from large holders. Options activity provided additional insight. Roughly 72 million in call volume and 20 million in put volume were recorded, and about 47% of the day's options flow leaned bullish. This stood out because many other stocks showed heavy bearish activity during the same session. Even so, the closing price below 28 meant that a large number of call options expired without value. None of the high open interest levels created conditions for a gamma-driven move into the next week, but the positioning still reflects how traders are thinking about future movement. Dark pool data showed relatively quiet activity, with the largest prints ranging between 2 and 3 million shares. The stock closed near 27.82, sitting between a key pivot point and the S1 support zone. Strong support remains around the 26.25 level, though it was not tested during the session. On the upside, the earlier move toward the 29 level placed the stock between its resistance 1 area and the pivot. One technical development worth noting is the close below the 50-day moving average. Historically, the stock has often bounced after touching this moving average, but a close beneath it sometimes leads to a period of consolidation. Previous examples show consolidation phases of roughly 20% when recovery above this level does not happen quickly. The last significant occurrence was during a period of broader market fear in early 2025. Another familiar pattern appeared in this session. Thursdays and Fridays have repeatedly shown more selling pressure across the market. While this is not a strict rule, it has surfaced often in recent weeks and may be related to factors such as fund positioning, weekly option expirations, or traders reducing risk heading into the weekend. Looking ahead, early week trading will be important. A move back above the 50-day moving average could signal stabilization, while failure to recover may lead to further sideways or downward pressure. There were no major new articles or company-specific announcements influencing this session. Market data showed buyers participating, but not aggressively. Order book movement indicated a tilt towards sellers, reflecting broader cautious sentiment across the market. Still, market direction can shift quickly. Potential updates around stimulus, economic relief packages, or changing interest rate expectations could easily influence momentum in the short term. Analyst activity remained quiet as well. Several analysts have yet to update their price targets or ratings following the recent earnings report, which is somewhat uncommon but not unheard of during uncertain market periods. Overall, the latest trading session was shaped far more by macroeconomic developments than by anything directly tied to the company. Price movement reflected shifting expectations around rate cuts, institutional repositioning, and market reactions to delayed economic data. Although short interest rose and several institutions sold during the session, the broader trend over recent months still shows strong long-term institutional involvement. Technical levels, especially the 50-day moving average, will be important to watch as the next week begins. As the upcoming sessions unfold, key areas to monitor include whether the stock can reclaim the 50-day moving average, how the market digests any new economic updates, and whether sentiment shifts in response to additional information. Market momentum can change rapidly, and the next several days may offer clearer signals about the direction from here. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.